Welcome, traders. It is Sunday, the 13th of August. I'm recording this for the week commencing Monday, the 14th of August. Let's have a look at what's going on in the economic calendar this week before we get to the charts. I would note for those of us in the UK, claimant can't change, right? So we'll have a look and see what happens with that. Obviously, all the red things will have increased volatility in the markets. I expect that CPI these will really be inflationary indicators. So CAD CPI, obviously, will have that impacts all of these together. We'll have that. There'll be initial volatility and then potentially some possible moves in the markets. After that, we've got retail sales. So are there going to be is there going to be a slowing of sales or activity in the US economy? We'll see if that's going to be the case. There's rumors, and I think possibly worth paying attention to, which is not a complete surprise, rumors of potential shrinking of the second-hand car market and property. And that's not necessarily a bad thing. If they were in a bubble and they need to cool down, that would be something that we get. Okay, so it might be a completely different thing to red flags where there's going to be, a massive recession or something up ahead, but there could be areas now, pockets where there's a bubble, where things have been overpriced for a very long time. And I would say the second-hand car market is 100% one of those. So if that needs to come down and cool down, then so be it. Now, next up, the sort of headline of the week will be Wednesday. This will be the Royal Bank of New Zealand's monetary policy. This always has increased volatility. So for traders who are exposed with any of the Kiwi pairs, there is guaranteed going to be big swings or big moves. Okay, not in a good way. And then we have CPI data coming out of the UK. So again, we'll see what the case is there. The data's been somewhat positive for the UK recently. Okay, that's fine. And then we've got employment change for Australia later on the week and finishing off Thursday, I beg your pardon, with unemployment claims out of the US, where I think it's possible we could see the numbers going up a little bit. And when I say the numbers going up, they can't always go down. And at some point, you're going to see if they go up a bit. I don't expect spikes. For example, we've had an increased number of tech layoffs, but they found jobs quickly. So you hear, oh no, this company has laid off 15,000 people, and then you think, well, why don't the unemployment numbers go up? Because they find jobs elsewhere. So that's a separate thing from whether there is a general actual increase in that. So right now, most of the data for the US looks good. I do think some of the stocks are looking a bit overpriced, but we'll get to that. All right. So that being said, let's move across and have a look at the rest of the markets. All right. Let's look at the charts. All right, so very quickly, I'm going to break routine. I'm going to do something here. The last few days, I've done a couple of euro-yen trade idea setups, and I want to include an update on that within this video rather than post a separate video and just bombard you with stuff. So just have a quick look at this. This is kind of where I was. For those of you who haven't seen the videos, they're really worth your while to watch. You will see them having been posted recently, but here's the basic logic. The basic logic is that the yen pairs are looking predominantly bullish on the daily. I look for euro yen to do a breakthrough of that level. I spoke about how a trader could enter on the break of that level with a stop loss below that on the daily swing low. Then I actually spoke about how day traders might be looking for another opportunity of that and basically waiting for after the breakout on the 4 hour or the 1 hour, waiting for price to pull back into the level of resistance to test it for support. So what actually happened with that? So let's go to the 1 hour so we can see what's happened there. I was looking for price initially to pull back into these areas, and there were two levels where it could potentially come back to, and ultimately what happened was it became overextended, produced a bullish engulfing bar, carried on, then went into a consolidation and has now started to head down. And so the second video that I did, or at least the latest video that I did on it, shows that actually now what I've done is updated the move. So I'm measuring the swing low for the bigger part of the 4 hour move and including now the latest pullback. So I'm still principally looking for an entry on this. And this is the area that I'm focusing on. So if you've watched those videos, you understand the context of where I am now, but the basic idea is I'm looking for a pullback and looking for an entry on the lower time frames. This is the 1 hour time frame, and we've got fib levels here. It has pulled back to the 382. Where it gets interesting is on the 15-minute time frame. So here we go. Let's explain what you can see here. The green box over here is what's set up on the daily. It shows the breakout of this level on the daily, and the bottom of the green box is the swing low on the daily. Then we've got a bit of a consolidation that occurred over here after the market did its move. There was a nice bullish candle. So in other words, the price initially did not pull back to this level. It did not pull back to this level. It basically started to pull back. News came out. It then kicked off. Then went into consolidation and then started to pull back. Here's where it gets interesting. Once I take the new move back and the new pullback, we've got a 382.50 fib, and they overlap with pivot levels. They overlap with support resistance levels. They get interesting where we are now. So the last video I did, I basically updated it. I said, okay, I'm now looking for a pullback to this level or a pullback to this level, rather than a pullback to this level or a pullback to this level. And then the market ultimately closed with this price action. So I'm going to hide them so I can talk you through this. But essentially, this is what I quite like the look of. The price has started to find support in this area and has ultimately finished with a nice bullish candle here, started to break above the highs here. And also we've got that MACD is starting to trend higher. So this is a hypothetical could situation where the market could start to work its way up from here. The only annoying thing is that we have Sunday night, the market's going to open, we could gap down or up, or we could wobble a bit, but this could potentially turn out to be the point at which it starts to take off. So in other words, what I would be looking for normally would be an entry above the high of this bullish candle, stop loss below the low of this, actually below this point here, if it wasn't a Sunday night. So Sunday night could throw the markets into a bit of a funny thing because nobody's in the markets. They're all going to start getting in once the market opens. But if it was a normal night or a normal end of day setup, I'd be looking for an entry above the high of this candle, stop loss below the low, and then looking for it to take off from here. Basically, this collective price action is starting to show it's a consolidation, started coming down. It looks like it's finding support here. You've got a lot of wicks, and you've got a nice bullish engulfing candle here that started to close above these highs. That now looks like the market's first attempt to start to go on from here. I do think I should pay attention to this level of resistance. I think there could be an issue, but if I do take this entry, I'll be able to take some partial profits before we get to this level. But also then potentially it would start to work its way through. So I'm not going to do another recording on this at this time. I'm going to wait to see what the outcome is. If by the time Monday, this time, tomorrow comes along and there's a different picture, maybe it's come down a bit and it's set up with a way more bullish setup, then I'll do a re-recording of it. But I wanted to update all of you on that. So here is what I'm looking for. This bullish close is a relatively nice standalone bullish setup, and it looks as though it might potentially like to push on from here. Okay, that's it. I'll leave you with this, and I'll just go back to my normal program can resume from here. All right, so where we now, we've got a little bit of a move to the upside here on the volatility index on the VIX. When you look at it from a bigger picture perspective, it's still relatively low. So what does that mean? Well, for me, it means that the markets are still calm. Okay, they're still calm, meaning that they're not stressed about anything. And again, if I watched The Big Short again this weekend. God, I love that movie. I've probably watched it about 20 times. I really, really like it. And one of the things that becomes apparent is that there's always a lot of moves happening undercover, or there's stuff happening before it necessarily hits mass consciousness or it hits the public. And so that's one of the reasons I love technical analysis, because you'll see orders going into the markets. The market moves on the orders, and therefore the technical analysis will reveal orders that are physically being placed in the markets, potentially long before you hear about stuff in the media. It's one of the things I really love about it. Okay, so here we have got the dollar index, the US dollar index. Looking at that weekly candle, it is nice and bullish. With a little bit of a failure here. It's got a potential level of resistance here. You can see it at 102, but I think it's more likely to push up here towards 103 before it does anything else. Okay, and overall, just in case you've been wondering, it hasn't really been very clear on the monthly. It has been going since January. It has been going pretty much sideways. So we've got a series of lower highs here, so I don't always use trend lines, but I'm going to throw one in here so you can kind of get a sense of that line in the sand. It still has the potential to head up towards past 103 even over here. And again, I'll just make that a very gentle kind of soft line in the sand, so we get a sense of it's still got room to go a little bit further up, and that could be this coming week. So this coming week could still see a stronger dollar. Now, let's move on to euro dollar as well. Bit of a failure of this previous of Thursday. Friday also nice and bearish, pushing lower. You can see the weekly candle looking more bearish than bullish, and you can see over here we've got a bit of a struggle happening over there. So what does it mean? It means for day traders it's really tricky, because you've got day traders that are operating on very, very small 1 minute time frames. They'll get their moves, they'll get their moves because they're very, very small moves. But also for people who are trading the 1 hour and the 4 hour, it's a nightmare, because you need a 150 pip move or a 200 pip move, and you're not getting that because the market is moving 50, 60 pips and then reversing. So your day traders trading on the 1 minute time frames, they're looking for 20 pip moves, they'll be okay. But again, they'll be frustrated. They'll probably have one where they make money and then they give it back. So it's a bit tricky and frustrating, but I want to explain why that is potentially the case. So I'm just going to update this, move that along a little bit. Okay, so we've got sterling is looking weaker and weaker as well, and I think over here it's still got that potential. It is sitting at a monthly level of support and resistance. It might be able to stay above it, but if it did break below with the stronger dollar, I wouldn't be too upset about that. You can see the Aussie dollar continuing to look weak, and the Kiwi as well. These are looking more and more bearish, and they are quite weak at the moment. And again, with Kiwi as well, we're expecting this to continue down. So we don't need to we can get rid of these. They don't need to be here anymore. We know where they're going now. This one as well. And so these are looking, so in other words, we have a stronger dollar. That's essentially what's happening. And because of that, if we move to dollar yen, we've been seeing dollar yen start to work. It's starting to obviously look more and more bullish. What I'm going to do over here, bring this in, put that in there and just kind of mark it. Actually, I want to mark it there. I'm going to mark it off those highs and just give it a weekly color. So I tend to do red for weekly, green for monthly. And so there we go. And so you can see where it's battling, but that actually looks like it wants to continue from here. Still a little bit of a level here, and I think it's likely to push on. The yen pairs, if we just step away, have a quick look at the yen crosses, you can see here, euro yen looking, that was one that I've just done that analysis on. That looks relatively nice and bullish. We've got pound yen is looking nice and bullish, a little bit overextended, but you can see they want to keep pushing beyond those levels. And then when you look at Aussie and Kiwi pairs, which are weak, then you'll notice that they're not as strong here. So we've seen the Aussie pairs, for example, let's have a look at Aussie Kiwi. It's not really doing much because it's stronger than the Kiwi, but you look at Aussie CAD is heading lower, Aussie Swissy is heading lower, and Aussie Yen is also not as bullish here. So Aussie Yen is a mess, and the same. You've got Kiwi CAD pushing lower, you've got Kiwi Swissy pushing lower, and Kiwi Yen is also just a mess. So you've got both of Aussie and Kiwi and yen are just weakening across the board. So that's why when you look at Aussie yen and Kiwi yen, there's not much happening there. We look at CAD yen, it's still trending higher, it's pushing higher. They've got some levels they need to get past. We've got Swissy yen, which is on fire, just beautiful breakouts. Any kind of a pullback here would be great as well. So all the yen pairs are on my watch list looking for entries for both either day trading or end of day setups for those looking for pullbacks. And they are looking good. The Aussie and Kiwi pairs are looking nice and weak. Okay, so that means Euro Aussie, also good opportunity potentially to push to the upside. But look at all the wicks that you have over here. Wicks along the bottom and wicks of that. That means that the intraday, although it is moving to the upside, it's very choppy. Okay, you've got Euro Kiwi. Also, wow, look at that. It's definitely overextended now, but looking good. You've also got Pound Aussie looking bullish, and you've got Pound Kiwi looking bullish. Okay, so Aussie, Kiwi, yen pairs for me are the best ones for those day trading opportunities and potential end of day setups. Moving on to, let's wrap up here with the other pairs. Swissy. So Swissy is looking bullish. It wants to break through this level, but it's a mess otherwise. It's very choppy. Dollar CAD. Dollar CAD is fine. It's just pushing its way up. You can see this, that we spoke about this last week. Lots of buyers propping it up here, bullish candle pushing it to the upside. It wants to go up, but it is still within a general, this is what we would call a bull flag. You can see it's got lower highs, lower lows, but once it breaks to the upside, it should continue higher. So I'm going to leave you with that, just to keep an eye on it. Then we move. So gold is still pushing down in this area. The green box on the monthly is an area where gold could potentially find support. So I'm actually going to bring it up a little bit tighter. I had it down at these highs over here. I'm going to bring it up a little bit tighter. And this is an area where I think that gold could find some support in this area. It's testing a level of support right now, 1900. So if it breaks through that, that's fine. But it is tricky. It is not it's more of a, to me, shorter term trading opportunities because it's very, very choppy. So I'm exercising caution. Whereas silver's obviously a little bit weaker, and you can see it's had a big move down. It's overextended to the downside now. It needs to do a bit of a retracement and come back up. So again, and looking at it here on a monthly basis, look at this. You've had 2 candles up, indecision, candle down, candle up, candle up, candle down, candle down, candle up, candle down. So it's just stuck in this area, and for me, that means that as a general day-to-day thing, I'm not a huge fan of it. If there's a setup, fine, but I can't reasonably be expected to say, you know what, every day there's going to be a great trade with gold or silver, because the higher time frames are telling me that they are range-bound, not really sure where they want to go. Then natural gas. I was asked about natural gas. Let's just have a look at that. So this is good in the sense that it finally managed to break. We really don't need this line here anymore. It has managed and has been trying for ages to break through this. So it's funny, if you've been watching my stuff, I've been talking about it turning around from even back here, and then I got in on a couple of trades here, and then I got out, I closed it out, and we're just still here, and it's still trying to turn around. And so that's what it was. There was a comment about this being an accumulation phase, and absolutely, this is a beautiful example of an accumulation phase. What does it mean? It's trying to turn around, it's desperately trying to do that, and there's more and more people effectively getting involved, but it hasn't quite yet got the momentum to break free. But it is a primo example of accumulation. Okay, and you look at it on the monthly, you can kind of see where it's stuck. That week was a bit of a failure, but I think we could see a follow through this week. Okay, so it could be something really, really cool. And it changes. Once it gets above these highs, once it gets to the other side of the 20-period moving average, it will start to pick up pace, become more aggressive. Crude oils, ladies and gentlemen, looking good. Again, we had our pullback, so again, we can kind of get rid of this stuff here. I'm still bullish on this. I do think it's become weirdly overextended on the, not, there's degrees of overextended. Like Nvidia is crazy how far that is, but this would be a standard sort of thing. It's at a level. I would love to see it pull back a little bit and then keep going. Alternatively, keep pushing and then come back and test this level. So this week I'll be looking for continuations for that Brent crude as well. Principally, they look bullish. They're not really bad on the monthly. They're still stuck within this range here with all this chaos that's been happening here. But they're starting to lean. Again, look at this gentle trend line that I've drawn here. If we look at it, it's a little bit more obvious on the weekly. You can see there's this gentle trend line coming in. And yeah, once we start to breach through that, this becomes, you can see as well here, we had a move down, then the price action started going sideways. And then we start to break up. It's, by the way, this is a question to all of you. I'm looking for some really good annotation software so I can draw on the charts, not using the chart tools, but using my own sort of pencil box kind of tool so I can mark and comment on the chart in real time. So if any of you know of any that are very good, I would be up for hearing that. Obviously, when I have a webinar or I run Zoom, Zoom has the tools. GoToWebinar, all of these have them, but I want something for my desktop when I'm recording videos for you, then I can draw stuff and comment on things. So if you know of that, I would appreciate that in the comment section. Thank you. So crude oil is principally still bullish, watching to see if it's going to continue. It is at a level, therefore, if it did pull back this week, I wouldn't be discouraged. I'd be then waiting for opportunities to go back to the upside. It looks to me as though the downside is done. You don't have wicks along the bottom of these. You have wicks over here. Buyers have been propping it up here. They're not propping it up anymore. They're moving it now. So you've got more buyers in the market now than you do here. And therefore, I think its future is to the upside. Not necessarily all the way up here, but certainly just starting to eke its way up. There we go. And don't forget that in some ways, we're going to start heading back in towards winter, and then the consumption of oils start to increase for various other things. Let's have a look at the global indices. All right, we don't need this anymore. This is just a mess. I apologize. I'm trying to kind of find a balance between how many lines is enough lines and how much is too much. Okay, so what do we see when we look at the monthly? We see it's a nice uptrend. It's broken these. It's trying to break through these highs and follow through on that. I think looking at this nice bullish candle, this higher low, this bullish candle, overall, there is an undercurrent of bullishness. I just thought that we would get a nice little weekly retracement back into these highs, and the market is quite bullish. It doesn't really want to give that back. I'd love to see it come back and touch these highs. So a little bit further, I would enjoy another down week. Okay, but it looks like the market is desperately trying to turn around where it is. Okay, so you've got stuff here as well. Like you've got a bullish candle there, so it could find support and then want to push its way up from here. But I would really think it would be healthier for the markets to have a deeper retracement. Here as well, look at this. This looks beautiful. So we've got the S&P here. It's come back to the moving averages, produced a small potential spinning top doji indecision candle. So it could turn around from here. So again, these are great ones to watch for the high and low of this candle. So what's going to happen? Which one do we break first? Because if we break the high, there's only two things that could happen in that situation. We break the high and we start working our way back up, or we break the high and we produce ultimately maybe potentially a bearish engulfing candle. Yeah, as I'm saying it, I realize, yes, there's more ways than just two, but those are the two most likely to happen. When I look at it from here, from a monthly perspective, and we're really not even halfway through the month, again, I would love to see a correction down here, tap this, and then finish to the upside, and you'd have a candle that looks like this. Would look great. So we'll see. We'll have to see what happens with that. I'm ready for it to go this way or up. A deeper correction down towards the 20, down towards these highs would be amazing, because then we could have a really good run up before we need to have our next correction. But if it decides now to try and make a run for it, then so be it. Then that actually just supports how bullish the markets are. So look here at NASDAQ. So this is more likely what I would want to see. For me, this is a really strong bearish monthly candle, which could imply that we have a deeper correction way down towards these levels. And again, this week, it looks to me as though they haven't, the bulls and the buyers have not capitulated yet, which means they haven't given up yet. They still want to buy, and therefore we could see this week finish higher, producing a green candle, and that could be a signal that the markets the following week, next week, are going to pick up from there. So we look at the mini Russell, that's coming back down into these highs again. Really healthy for me if we can touch these highs. So that's what I'm looking for. I'd love to just one more week of it coming down and touching bottom and then turning around would be beautiful. You've got here, for example, the FTSE, not looking super strong, but still wicks underneath, buyers propping it up. They don't want to give up just yet. How will you know when they give up? Well, let's just say that we did have a drastic week this coming week and we saw suddenly a big red candle close heavily to the downside with almost no wick underneath it. That would be a momentum shift to the bears would have just won that round, and therefore there would be a sentiment shift the other way. DAX as well, also trying not to correct too much, trying to stay where it is. The ASX in Australia, very small candles. So most of them are reluctant. They're a little bit like these kind of red candles over here. They show up for a week and then next week the market tries to push higher. The Nikkei as well, very overdue. Look at the little double bottom that it's produced here so far. I'd love to see it potentially, look, again, a deeper correction to me. And when I say deeper, I'm not talking about a 618, not even necessarily a 50% retracement. I'm talking just give me a 382. Would love to have that if we get those. All right, let's move on to equities. So Apple has been overperforming, essentially, technically, and finally had a nice, healthy correction. This, ladies and gentlemen, forget the drama you read about it. Look at a very nice correction, slowing down immediately. The last four candles staying roughly in the same area at a previous level of resistance. This is a fantastic area for it to turn around in. Even if this week it drops down below here and finishes higher, that to me would be a nice, healthy signal. Again, I would love for it to fall down a little bit lower. It is not, in my mind as a technical trader, it is not a reflection on the health of the company at all. It is just a technical correction, profit taking from bulls, so on and so forth. Not going to overcomplicate it. Amazon as well, just eking its way to the upside here. Okay, overall, it's coming up into a significant level where it is on the weekly, but it's not overextended on the weekly. It's not even overextended on the monthly. Amazon has got, I want to say it's got nothing but upside, nothing but sky. I want to say that I think it has good potential. Okay, so now we do have a level that I think I can mark here on AT&T. I think we're starting to see the market trying to turn around here. We'll see if that's the case. It's desperately trying to do that here. We'll see. It's got to succeed. We've got to see it break this high here, but it is trying to stem the drop to the downside. ARC Innovation, a little bit of a correction here, but it's in this area where it could produce a bullish candle. So if we did have a bullish candle this coming week, that would be a signal to me, along with bullish candles in other charts. Then I would say, okay, we're going to see a turnaround. But it is technically still free to come down to the bottom of this and still be stuck within this range. To me, back down to this level anywhere in this area would still be a positive sign. Glencore stuck within its range, no real change there. Once it breaks out to the upside, that'll be a great sign. I was looking for a bullish candle here. We got a little bit of a green candle here. That's all. It's just getting into sort of an inside bearish candle here, so it's not showing too much here on Tesco. Amex still trying to stay where it is. You can see a lot of them are not really willing to necessarily give up too much ground. Berkshire Hathaway, a good week, still exhaustion. So we had a lot of that. I marked this level. We still had another one here. I think that I want to say I think that we're still due a correction on Berkshire Hathaway. We still need to have it happen here. And the clue for me will be a bigger red candle, something a little bit more like that. I'm exercising caution here. We do need a retracement in these areas. I don't recall having set WhatsApp to give me ping sounds on my desktop before, but now I started doing it. So there's a pullback. This is a bullish candle. So what does that mean? Well, it's a bullish candle. It means it's potentially likely to go up from here. But yeah, I'm expecting at some point in this area to see a bit more of it starting to struggle a bit otherwise. Coca-Cola, that could be a potential turnaround point here. These look really nice and bullish, so let's move this stuff over here. They look really nice and bullish. Let's see if this level can hold this week and if it could push up from here. BP, crude oil's going on the rise, so it's a foregone conclusion to me that BP and Exxon will climb. Okay, not necessarily, they might not climb the same way, but you've got a bullish setup here, so you've got a bullish candle here, could go up from there. The weekly is sort of working its way up, and the monthly is working its way up. So that's all I expect from these guys. That's what they're going to do. Look at this weekly breakout of consolidation. This is a clear sign. There's your consolidation, and there's your clear candle. That's a momentum candle. Tells me it's broken out of the range and it most likely intends to continue from here. So it's actually quite a bullish signal. How do traders trade this? Well, there's different ways. There's not unlimited ways of trading, but let's say that there's 100 different ways of doing it. Traders would enter now on a high above this candle, stop loss below the low of this candle, or potentially below the low of these two candles. So they've got a little bit more technical protection. You could put your stop loss below the low here. You could kind of do that. You could look for an entry on the daily, wait for a pullback. There's different kinds of things, but yeah, simply put, some people trading on the high time frame would just get in on this stop loss below the low and target taking profits as you go. General Motors, more bearish, still stuck within the range. At this time, to me, it's more important to acknowledge that it's within the range. Don't assume it's going to break out and go to the downside yet. It's not the right way to do it. JP Morgan Chase, also looking good. A bit of a correction here would be beautiful. Just a nice pull down to this area towards 150 and go from there. That's what I'd like to see. Adidas, it's looking fine. It's not strong, but it looks like it might actually keep going. I'll go through these during the week and clean up the little graphics and stuff that I've added on them. Meta desperately needs a retracement, in my opinion. I said this before, down to 250, down towards 200. Anywhere in this area would be phenomenal. I think the best one, even right now, I'd accept 245. But I need to see how the monthly candle closes. Similar to NVIDIA, when you get that monthly red candle, that's probably the one that's going to do it. At the moment, you can see it's starting to whipsaw a bit. So it goes from nice trending to up, down, it starts to whipsaw. It's stumbling, and that's usually a sign that it's going to potentially start to come back down. So it's not very far that it has to come back down. I'd like to see that happen, because again, until that happens, it's just going to whipsaw around. So it doesn't bode well. Again, you've got just a mess over here for Morgan Stanley, but overall it's in an uptrend at the moment. On the weekly, it's above the 50-period moving average. This week could see it push back up. So we could see this week, could potentially see it finish higher. Here we go. NVIDIA finally giving us kind of what we've been waiting for, not for that long, a couple of months or a month or so. This is our signal potentially that we're going to have a bit of our correction. Based off how bullish the market is, it could potentially just come back down here. Okay, the 10 and 20 are moving up to meet it. Could come back down here. Should we have a look at what that is as a fib level and see? Hello. There we go. Sorry. There we go. So let's move this up to there. And there we go. 382. Bing. There's your level. All right. So I expect it to at least come back down towards these levels, and it's in the danger zone. It's good. This is very good for NVIDIA. A lot of people panic and misread it, but it was overbought. And a big part of this move was just shorter term activity, not anything to do with the company's performance in the last month or two, but more to do with the enthusiasm, and it's overshot. Okay, the markets can overshoot and undershoot. Netflix. Okay, a little bit of a stall happening here. Indecision candle, we break the low there. We could see price coming back down. Look at that continued failure at that level. Again, very nice area for it to pull back to. I'd like to see that happen this week. So while we're going, just mentioning that this week could see the markets potentially finish higher in the coming week. They could drop first and finish higher. That would be a very nice bullish signal. Okay, but if they finish to the downside, that's not a bad thing. It means that we're likely to see the next week be the week that it turns around. PayPal, obviously, just, man, you guys are struggling. You're not doing well. Spotify, seems to me to be a normal correction. Wix starting to come in here as well. This is starting to try to turn around. We'll see. It might drop a little bit low, but it is trying to turn around where it is now. We've got Spider. This is just very much to me a mess. And over here on the monthly, a mess. So not expecting too much from that. So yeah, whatever this does, whether it goes down or up, I think it's going to also try and stay where it is and go up. FedEx is doing very well, man. They've really picked up from where they were here. And this, again, is more institutional buying, just very orderly. Doesn't happen randomly with the crowd, so to speak. It doesn't come from the wisdom of crowds. So consolidation breakout here, that's a move. Any kind of a pullback here would be a small one. This is not, even in my mind, this was a consolidation here and a monthly breakout. I don't think this is too overextended. I think it still has room to go before it has a correction. So I know it's wobbling a bit here, and yes, there's a bit of bearish divergence there, but a small correction, I wouldn't expect much more from that. Overall, I actually think it's pretty strong. Tesla. So I did a separate standalone video. Again, I'll ping these up in the top screen over here. You can see it in this area, talking about Tesla. These two lines in the sand. If Tesla starts to breach these lower levels on the weekly, then, especially if it breaches this one, then the likelihood that it's going to go a lot further down is on the table. It could find support in any of these areas and then resume its uptrend. And again, if it starts to break up, if it breaks this level, then the old highs are on the table. Okay, so that's why I need to see what's going to happen with these levels here. Vanguard, nice little correction down to here would be amazing. And that's what I'd like to see it do this week. Again, I would say I think it's fair to say, generalizing, they've done a third to a half of their correction at this time, of what I wanted them to see. Not all of them, most of them. 10-year, so bonds again, bonds dropping lower. Again, there's still no love. So there's not a lot of buying of them, which again also supports the idea of a bit of a bullish market. Eurobond as well. You know, look, why do I talk about it like this? Well, back in the day when Buffett was a young man, there were kind of two things you could do. You could invest in stocks and you could buy bonds, and bonds were government backed, and they were great for when the markets were struggling, and stocks were great for when the free markets were doing really well. The world's way more complicated now. So you've got far more complex derivatives, and you've got so many other things. And I think also because of that, I think people put their money elsewhere. They're not interested in buying bonds at this time because they're still confident that they'll have time to do it if the market turns bad. Plus, the markets, they're still hungry and they're still making money. And so I'm oversimplifying it. I acknowledge that, but I think it is possibly that simple. The money is not seeing that it needs to get back into safety just yet. Could just be that simple. Bitcoin. Yeah, battling in these areas, but wow, it's pulled back here. It's a bit of a bullish weekly candle there. Could actually work its way out. So again, a lot of this from last week, I was like, oh, okay, we might see a bit of a deeper correction, but the market seemed to have corrected a bit and stabilized. I would like them to see a deeper correction, but they're all of them are set up with bullish weekly candles now. This one's above the 50 weekly. So let's use Solana as a technical exercise. Yes, it's still stuck at levels, and levels should take preference over moving averages, but I would just notice that the MACD is trending bullish. It's about to cross the zero line, which means it's technically a little bit more bullish than bearish. You've got price having broken above the 50-period moving average pullback, produced a bullish candle, a little bit of a on a microscopic scale, that's a double bottom. Okay, those two levels are double bottoms, which are these two. And the market might take off from here. And the 50, 20, and 10 will turn around. So this could be starting to become bullish. That's worth mentioning. There we go. Okay, so just to recap, I will there will be at the periods when I spoke about the euro yen trade, I'll link at the top of the screen those two videos so you can watch them. And then when we talk about Tesla in this video, I'll link that in the top right hand screen. So up here, you'll be able to see those links. And ladies and gentlemen, I want to wish you an amazing week and wishing all the best. Trade responsibly and sensibly. And yep, looking forward to chatting to you next week. Thank you.